remember, if this is your first time here, if it's your second time here, you also might not be subscribing, liking the video, and you might not be commenting down below. So please like, comment, subscribe, turn on the notification bell.
By the way, you don't want to have to do a GoFundMe. And mind you, GoFundMe will tax you on the on the income. Any donation you're gonna get taxed on. Yeah. And life insurance benefits are tax free.
Okay, so to touch on that, right? So you're saying tax free, business owner, a lot of stuff. You just do a lot of stuff out there, right? So not to be a micromanager, right? But I'm hoping we can go in depth into a couple of those things, because when I think about the logo, I think primarily about life insurance. And so what I heard you say, now backstory, obviously I know a little bit about Coach Jermaine. So when he told me some of the stuff that it is he offers and that his company provides, I was a little taken aback because I was unaware of all the opportunities that were available through his business. So when you say life legacy and tax-free assets, or some kind of tax avoidance on some level, can you give me a little bit of an example?
Most definitely. So okay, so a lot of times if you don't either work for like the fire department, the police department, or the military, a lot of people don't have pensions anymore. So pensions are pretty much, you work so long and then they're going to pay you out for the rest of your life. But now people are so heavily reliant on 401ks, right? 401ks are a great tool. I have one myself.
Yeah.
But the thing with 401ks is you have to end up paying your taxes as soon as you pull it out. You have a 401k, so you know.
I know.
So all this money, we're working so hard, putting all this money into this vehicle, and then when we retire, depending on when you retire, 60, 65, or whatever, you're going to owe money on those taxes. Those taxes you're going to owe money on. What I do is I help my clients not necessarily spend more money, but just reposition the money that they're spending.
To avoid taxes?
To help avoid taxes.
Ah, okay.
Right?
See, now we're getting somewhere. So when you say avoid taxes, whatever, or vehicles to avoid taxes, because I like to talk about taxes. I know it's a taboo, or people just despise it. I despise paying taxes. Y'all know this is a financial channel for the most part so far. I do everything I can to avoid interest on credit cards.
In which I like those videos. I'm like, I'm sharing this one.
I appreciate it. So if you haven't already, y'all know we took a quick pause. We had to reset. But if you haven't already, hit that like, comment, and subscribe. I really appreciate it. It helps the channel grow. So we were getting into avoiding taxes, avoiding interest on credit cards. So you were just saying vehicles and assets, right? So for disclosure, I'm going to let you guys know, I was able to acquire life insurance for my wife through Coach Jermaine. Now, me and my wife already have life insurance policies, but this isn't a sponsored video. You are not paying me to be on the channel, right?
We have a friendly conversation amongst friends.
Okay. And more than anything, just like I want to help people, Coach Jermaine also wants to help people.
Yes.
So I want to say that first, but I also really want to go, a little bit deeper into not only the life insurance, but what are some of the vehicles that you speak of when you talk about avoiding taxes?
So the main vehicle, one of the main vehicles is a Roth option.
Okay.
Right? So we all have 401ks, IRAs. Pretty much a 401k is a sponsored retirement plan from your job.
Okay. Right?
But you have also what's called a Roth option. The Roth option is pretty much helps you pay your taxes now, right? So at the end of the day, the biggest example I like to give is, let's just say we're farmers, right?
Yeah.
I'm an apple seed farmer, and you grow the apples.
Okay.
I come to you and say, hey, Coach D, I got 100 apple seeds, and you could pay taxes on your 100 apple seeds right now, or you could pay taxes on the 100,000 apples that it grows. What would you rather pay your taxes?
No.
Exactly. right?
Because that's more apples later.
Yeah,
right?
you have more apples
Okay.
later. So
Okay.
right now, because of the way the taxes are, is we're actually in a low historic tax environment. So the whole reason why 401k was created, so we could defer taxes just to pay them when they're lower. Because in 1970, like with the highest tax bracket was 70%. So imagine you put $100 in and you take $100 out, but they're like, no, we're only going to give you $30 because we're taxing you 70%. How would that make you feel? That would make me feel horrible, right?
Yeah,
so Congress got together and said, hey, how are we going to help people defer their taxes away to pay them when they're lower? Perfect example, the 401k. All these people that put in their money into the 401k got to defer their taxes for now.
Yeah.
But me and you know, we're young. You're about 27 and I'm 30, right?
I like it.
Okay, no, I'm just playing. You know, we're in our mid-30s.
Yeah.
20 years from now, 25 years from now, taxes are going to go back up.
Yeah.
More than likely.
Yeah.
I can't guarantee that, but it's going to go up.
Pause, Coach. I can guarantee it. With this pandemic, with all this stimulus money that's been given out, at some point in time, we're going to have to pay it back. And it's going to be the working class. It's not going to be big businesses, big corporations. And I'm not getting political. I just want to speak the facts. So that's why I agree with you. And you just have natural inflation. So our money in the future is going to be more valuable than the money today. So it's better to pay taxes today than in the future. You know, so I'll let you get back into what it was you were saying.
Okay. So, yeah, so the 401k, you defer your taxes, pay them. You know, the people that are retiring now are benefiting, right? But so now, because we're anticipating those high taxes, is people are doing Roth options. So Roth options is just pretty much a fancier name to say, hey, we're going to let you pay your taxes now.
Okay.
Right? So when you retire, you get that money tax-free. It gets to grow in that retirement account, you know, compound interest, you know, inflation, whatever. And on top of, you know, you still have to deal with the market up and downs.
Yeah, of course. So with that being said, Coach, you were saying you have to deal with the fluctuations of the market up and down, right? But do I still avoid the taxes in the future? Yes,
you definitely avoid the taxes in the future with the Roth option.
Nice.
Right? But having that said there's also a way to avoid taxes, but make sure that you have guaranteed growth too.
Is that because the guaranteed growth is because your money is in the market?
No.
Okay.
So a lot of people don't realize that with life insurance, it's more than just death benefit.
Okay.
There's a living benefit to it.
Okay.
So imagine, let's say, for instance, your car insurance, right? Your car insurance, right? You pay your car insurance, let's say, there's Geico, right?
Yeah.
You pay your car insurance. So, okay, yeah, whoever, yeah. So let's say you're paying your car insurance for 20 plus years. And after that 20 plus years, your car insurance company comes to you and says, hey, Darnell, you know, we really appreciate the fact that you were paying your car insurance on time. We're going to give you all your money back. Plus, we're going to up your coverage amount. How would that make you feel?
Amazing. That doesn't happen.
Exactly. It doesn't happen. But it does happen with certain life insurance companies. It's called permanent life insurance. Permanent life insurance is a benefit where the death benefit continuously grows. So let's just say you started off with something small, $100,000 or $50,000. As you keep paying for it, the death benefit systematically keeps on growing as long as you keep up with your premium. And then if you pay into it long enough, you get to reap all this cash value, they call it, 100% tax-free.
Okay, hold on. So you saying, because now I know myself personally, there's term, right? And then there's whole life, right? So the whole life is where I'll be able to get some money back.
Yes. With
term, that's for a certain period of time, right?
Yes.
Okay. So, and now, just for clarity for people that don't understand, when you buy a term policy, that's for 10 years, 15 years, 20 years. What's the max on the term?
Some companies do a 30.
A 30.
Some companies do 30, yeah.
So at the max, you will be looking at 30 years. So that means your premium, meaning how much you would pay on a monthly basis or an annual basis, is going to remain the same for the life of that contract. But if I'm correct, maybe you can help me understand this a little bit better. But when you have term, you can't pull money out on it. It doesn't have a cash value, but you can transfer it over to the whole life side and then start to reap the benefits of getting cash value. Is that correct?
You're absolutely right. Majority of insurance companies will allow you to transfer your term insurance into permanent or / whole life.
Yeah.
Right. Some oftentimes, some companies won't though.
That's fine. Your company does. You said some companies won't, but your company does.
Mm-hmm.
That being said, okay, so you said we have the Roth IRA, right? Can you give me another example? So we spoke about the Roth IRA. We just spoke about the difference between term and whole life.
Yes.
Now we know your business allows you to transfer the term into whole life.
Yes.
Now, I want you to talk about some other options, but I also know something about, and we could touch on this in a little bit, but I know there was something about you telling me about your company paying like a dividend or something.
Oh, yes.
Yeah, yes. So, but maybe that's not for right now. Maybe 5 or 10 minutes we can get into that. But can you tell me another way that your company provides assets or will help lead to financial freedom?
Yes. So, all of the process we actually take our clients through, it's not transactional. Like, a lot of times people think, when you're purchasing insurance or any kind of financial vehicle. So another vehicle that is a tax-free vehicle, it's called a municipal bond. It's super, super safe, but you don't necessarily get a whole lot of interest, but it's super safe. So imagine like a municipal bond. Like let's just say Rancho Cordova had to build a bridge from here to, I don't know, San Francisco. So what the city of Rancho Cordova is going to do is to say, hey, citizens of Rancho Cordova, like, hey, we're going to need to build this bridge. So can we borrow some money from y'all? Okay. But if we borrow some money from y'all, we're going to give you 2%, and it's going to last for about 10 to 20 years is how long the bond's going to last.
Listen. Not to cut you off, I don't know if the 1 or 2% is accurate, but I know if you keep your money in a bank account, they're paying you 0.01%. Okay, on any money you keep in there. So the interest that you earning at your bank is 0.01%. If you can get 1% right now, because even my online high interest savings account has dropped down to 0.8% interest, right? So anytime you can get more interest on your money than you would get at your personal bank, I would say it's a great investment.
You're absolutely right. Mind you, like I said, you'd have to check out to see if municipal bonds are at 1 or 2%. But historically, you have those small returns, but they're guaranteed, super guaranteed. They're very, very safe. They just take a very, very, very long time to get your money back, but it's tax free.
So, tax free is always the key, right? So that was the third option. So we had whole life term, Roth, municipal bonds. Can we get a little bit into that dividend that you were talking about? I love dividends.
So dividends with certain policies, like when you trade in the stock market, you do well, they give you a dividend. Okay. But with some permanent insurance policies, depending on what kind of company you work with, you get what's a tax-free dividend. So these permanent insurance policies, depending on who you get them from, if the company does well, they put a dividend back into the policy. So imagine you're getting a guaranteed rate of return from this permanent insurance policy. On top of, they're going to give you a tax-free dividend if the company does well at the end of the year.
So for all of you that don't know, like he said, a dividend is no different than the stock market. If you buy one share of AT&T, the phone company, if you buy their stock, I think they're the highest, right? So I like to just give examples of the best. That's why I have you here, because I believe what you offer is top of the line. It's the best. AT&T offers a 6 to 7% dividend, which means that's really good.
That's solid,
right? But what they don't tell you is it's a possibility to have a dividend freeze with any dividend stock. Right? And what Coach Jermaine has told me is that, I don't know, 50 years, 75 years or something like that, you guys have not had a dividend freeze, meaning you've paid your shareholders or the people that are invested in your company a dividend every single year, regardless of win, lose, or draw. That dividend has been paid. So if you want, like, guaranteed money, no worry about dividend freezes or anything like that, I would definitely say that's the way to go.
So yeah, just to be 100% like forthcoming,
Yeah.
dividends are not guaranteed. Like no, right?
I agree.
But some of the companies that I work with, especially the one company I would choose to partner with when I first started, they've been paying their dividends for 167 years consecutively.
I knew it was something crazy.
Yeah, it was coming crazy, and it's just like that's why
fine print. Nothing is guaranteed. They could always have a dividend freeze. Mm-hmm. He has to say that.
Yes,
I agree. Nothing is guaranteed.
But it's kind of hard to say the company that I partner with won't pay one now because they've been doing it for 167 years.
Exactly. And that's all I'm saying.
Not to mention during the first pandemic as well.
So, and that's really all I wanted to get to is when you have 167 years, over 100 years of doing something, the likelihood is much better than not that you're gonna have continued success. Now we covered the ways to make tax-free money, the ways that you can attain life insurance. And before we go forward, can you just give out your information for people?
Yes. So I'm pretty old school. Give me a call, straight direct call, 925-848-5220. Hit me up, leave a voicemail. I will return your call pretty promptly.
So if you haven't already, hit that like, comment, and subscribe. Turn on the notification bell. I really appreciate it. It helps the channel grow. Like, comment, subscribe. Okay, I appreciate it.
Hit the bell. Bing.
Listen, the thing I like about this friendship is, like I said, number one, I gotta say it again. This is not a paid advertisement. I actually asked him to be on the channel because number one, I'm about financial freedom. That's the whole thing about this channel, and just financial education in general. And with what he's been able to provide me as far as life insurance and just education about life insurance and all the options to have tax-free money, it's been such a great opportunity that I was like, hey, can you come on the channel and share that with my audience? So
thank you. I appreciate the.
No, it's love.
My first 15 minutes of fame right here.
Yo, you're hilarious. Hit that like, comment, and subscribe. If you haven't hit the like, comment, and subscribe already, I don't know what you're thinking about. We provide a lot of content. So I would really appreciate it if you hit the like, comment, and subscribe. My city didn't have life insurance, so this is something that's near and dear to my heart, something I take very serious, and something that I speak to my family about all the time because, especially us growing up in the black and brown communities, we don't take life insurance serious. So I just want to say,
it's generational wealth. It's the great easiest way. Sorry to cut you off.
No, you're good.
The easiest way to create generational wealth, especially in minority communities, is through life insurance. And you'd be surprised how cheap life insurance really is.
Yeah. Like
if you brought your lunch maybe twice a week, you can have a very great plan.
There you go. Yeah.
Bottom line. And work insurance don't count. You need to get insurance outside of work.
Yeah. I mean, the more the merrier, because that's the other thing.
The more the merrier, yes.
This is the bonus features, right? You can have both. You can have multiple life insurance policies. I want to thank you for coming out, spending some time with me on the channel. I look forward to having you back on the channel. I appreciate all the free education to the audience. And again, if you don't listen to anything else that we said, understand that this right here is the biggest key to creating generational wealth. Okay? This is the biggest key to creating generational wealth, and don't leave your family with a burden.
Yeah.
Okay? Make sure your family is protected. So, at the bare minimum, if you don't listen to anything else we said, get life insurance. Okay? One more time, what's your number?
925-848-5220.
Like, comment, subscribe. We'll catch you on the next one. Thank you.